Hi everyone, it's Brittany and Katie with the Q team in Rochester, New York. We're back today to talk about a popular topic.
Hot topic alert.
Yeah, not so popular among buyers, but it's a popular conversation that we're having. And that is when we're writing an offer on a listing, we obviously know there's going to be multiple offers, a lot of competition. That means a lot of stiff prices that are thrown up there. So we are telling our buyers, or asking our buyers rather, are you able to make up the appraisal difference?
Mm-hmm.
And the first time they hear us ask that, they say, what does that mean?
Mm-hmm.
What do you mean?
So an appraisal gets done if you are getting a mortgage for a property. And what they do is basically a third-party appraiser comes out, looks at the property, makes sure there's no issues with it, and they determine what they believe to be the market value of the property. Mm-hmm. And ultimately, that price that they come up with is what the bank is willing to loan you. So if you're willing to pay one price and the appraisal comes back at a different price that is lower, then there is a gap between that price that you are willing to pay and what the bank's going to loan you. So there's a few ways that we can handle that. Either the seller can lower the price, the buyer can make up that difference in cash at closing, or something in between. So I guess, what does it mean when a buyer says, all right, I'll make up an appraisal gap with my offer?
Yep, so what that means is in the previous world that we used to live in a couple years ago, this wasn't even a thing.
Right.
Because if the appraisal came in low, it was just,
we
Mr.
negotiated
Seller,
then.
Yeah, Mr. Seller, will you come down? And if the seller was like, no, then we were like, will you split it with us? There was negotiation room. In the market that we're in now, there's not. So what that means is we have to tell the sellers up front, like, we're willing to make up that difference. So if there's, if we offer $250,000 on a house and the appraisal comes in at $242,000, let's say, the bank will only give us $242,000 on it. So that means we are telling the seller that we will pay that $8,000 difference at closing, so that they still get their $250,000 that we offered them, because that's what we had already determined and told them we were willing to pay. So that's the value that we put on that house. So saying we'll make up the appraisal difference is guaranteeing them that there's not going to be any shortage, and that
what we give them is what we give them.
Yeah.
It essentially makes your offer as good as cash. That is why a cash offer is typically superior to mortgages. Ultimately, the money is the same in the end, whether a buyer gets a mortgage or pays cash to the seller. However, with a cash offer, there is no appraisal. So a seller knows with a cash offer that what they see is what they get. There's not going to be this appraisal issue. So what you're doing when you're agreeing to make up an appraisal difference is you are putting yourself in the same playing field as a cash offer, because you're saying the same thing to the seller. What I'm giving you is what I'm giving you, no matter what the bank says.
You're going to get what this number is.
And so what we do as agents is we want to make sure that our buyer is prepared financially and mentally and all of that for what this could mean. If the appraisal comes in fine, then perfect. You don't have to pay anything extra.
Oh, happy day.
And we will do our due diligence to kind of run what are the comps, what's the data that the appraiser is going to use to determine that appraisal value? What is our best guess at what that appraisal may come in at if it comes in short, so that our buyer's prepared. If they got to come up with an extra $20,000, make sure they have it.
Right.
Make sure that they are prepared if that situation arises, and that all is good.
And usually we can kind of distinguish if there's going to be a small gap and we only think our buyers are going to need a few thousand extra dollars, then whatever, in the grand scheme of things, a few thousand extra dollars on your closing costs is probably within the range that you were expecting anyways. If we think that there's going to be a discrepancy, of course we're going to tell you that up front and say, you know what, we think that you could need 10, 15, 20 grand, because this is what we're seeing other things are closing at.
Yeah, right. So making sure you're prepared, make sure you have it, and make sure if that isn't money that you have available to use, maybe there are other ways to have a little bit of a cushion, whether you might be able to borrow that from a family member or in the short term, or whatever the case may be, just to kind of be prepared.
There's different avenues for that.
And if you can't do this, then we will do our best to get our offer accepted. We just know that this is kind of what we're up against, what a lot of buyers are doing. So I have some buyers that are first time buyers, and all the money they've saved they're putting towards the house. And sometimes they have a certain percentage down, and they're like, well, we could lower that percent down and put that difference towar's the appraisal if need be. And sometimes it's like, I don't have anything extra. And I'm like, all right, well, we're just gonna put our best offer we can in, and we'll get there eventually. But
something will stick, right?
So we just wanted to kind of educate everyone on what the most recent tactic that is helping buyers get their offer accepted is, and
what that means, because people are like, I don't understand what that means. Well, this is what it means, and crappy, but it's just the reality.
All right, so we're gonna help you get there, get your offer accepted, and make your homeowner